A very good morning, ladies and gentlemen, and welcome to the program. Thank you for staying tuned. You're watching Smart 24, where we drive your business. My name is Anthony, and I am your host. Thank you very much for remaining tuned. Now, Smart 24 is a channel that definitely gives you business content here in East Africa, and especially, particularly here in Uganda, trying to see that we grow our businesses and expand our window for example, to increase our investments in several markets, the commodities market, the financial markets, and so on. So if you are interested in 24/7 business news, business updates, what's upcoming in entrepreneurship, you have to stay tuned at Smart 24 TV. And definitely you can catch us on GoTV on channel 394, and you will be able to access all the content of business here in Uganda. But as well, you can follow us on our social media, and on YouTube we are Smart 24 TV Live. That is our live stream, and then you can also interact with us on our Twitter handle by following Smart 24 TV. I hope you had yourselves a wonderful weekend. It's a very wonderful Monday morning, the 25th of July, as of course we wind up the month of July. Time is rushing really fast, and we're almost past halfway the year. And definitely we hope you can see some of your resolutions that you made at the beginning of the year. Maybe you've realized some, maybe you haven't, but life is about keeping on. And if you haven't, you have to push on. We still have some time. It's never too late for someone to always begin again. That we start, of course, with our financial markets here in Uganda. Definitely, we've of course just previewed one of the very momentous achievements of Altex East Africa there, as they were launching the Zabu initiative. Now, in conjunction with Altex Clearing, Altex East Africa was able to for the very first time in Uganda, increase accessibility of the securities across East Africa, including the debt market in the equities in terms of the bonds and the bills, and then also the equity market in terms of buying stock. Now you can do that using your mobile phone without need to access the internet. All you have to do is to dial *292#, and definitely you will be able to access the securities across East Africa, that is in Uganda, in Kenya, as well as Tanzania there. And of course they're expanding. Probably they'll grow even to other countries, maybe across Africa, and then maybe as well as we move and progress, we can have access to the global markets. And of course, since it's a Monday morning, definitely we do review here how the stocks perform. But before that, we also look into the background of this entire program, where we look into financial markets. Now, for starters, these markets include 4 segments, and these are stipulated out, of course, in economics. And if you have a financial market, you will expect at least one of these 4 to show up. Number 1 is the equity market, which we mainly look at here. Looking at it in terms of, some people call it the stock market, but generally we look into listed companies that are listed on official security exchanges here in East Africa, and particularly the Uganda Securities Exchange. And we look at the performance of these companies. We look at the investments, how people are investing, the price movements. We look at the year-to-date performances. We look at the monthly and weekly and daily performances, and we track and monitor also the performance of the indices. That is these particular figures that are able to track the performance of a certain group, a specific group of companies that are listed on the exchange. And here in particular in Uganda, we look at the Uganda Securities Exchange with over 18 listings. 10 of these are locally listed here in Uganda, and then 8 of them are cross-listed, mainly from Nairobi Stock Exchange. We look at each of the gainers in details, the losers, and then we evaluate and make predictions. But basically, we just want you to understand how this particular market also is able to impact impact the economy, is able to impact you as an individual and your savings, and making use of that money. Also, how these companies are able to benefit from being listed. Remember, for starters as well, this market is an entirely a borrowing market, where we see why it's called a capital market. We see companies that are seeking capital, like MTN Uganda, like East African breweries, equity banks, and so on. For the very first time they come on the exchange is to look for capital, and they come on the exchange and list several shares, where people buy shares into the company and are able to become part owners of these companies, but also contributing capital in the long run for these companies to grow and to expand, and definitely make a little bit more money. Now, the investors, people who are investing in these companies, gain, of course, number one, by being able to have the rights over the company. They are part owners, so they take part in critical decision making for the company, including voting for new leaders, or reappointing new leaders, or approving appointments made by the companies. And definitely this is done through the annual general meeting, which is held at least once every financial year. And also they discuss the results, the financial results of the companies, because these are public companies, if at all they come to list on the stock exchange. Now, when we look at the stock exchange, we have the markets divided into two still. If you have a stock market, you have the primary market and the secondary. Now, when we look at the primary market, we are talking about the initial public offer, and that is the very first time a company is listing. And the case in point is for MTN Uganda, which listed just recently in December 2021, on the 6th of December. And this day saw this company come on the Uganda Security Exchange for the very first time. And of course, it was a lot of frenzy, with people coming up to see some of people who had never seen an initial public offer coming on board, to also witness one, and some people who had never really got to understand what really the primary or the initial public offer really looks like, also go to see that. Basically, this time around, the company itself is the one trading these shares. And of course, after issuing a prospectus to the Uganda Securities Exchange, and the company has been seen to qualify for the initial public offer, definitely these shares are listed for the first time on the exchange, and the public is invited to take to come and buy and take shares from this company. Now, this initial public offer doesn't last forever. It lasts about a month or so, and after this particular period, you have to move to the secondary market. But immediately after the shares that were listed are bought, those that could have remained maybe are not bought, the company can take them back into its own docket by being the biggest shareholder, of course, in this particular stock. Now, looking at the primary market, we see that in the primary market you have a fixed pricing with not much movements. You don't see people saying I'm buying at this. It's a fixed price. Maybe, for example, MTN came at 200 shillings per share. Immediately after the initial public offer now is done, and we move into the secondary market, where we look at right now the performance of these stocks based on their secondary market performances. We now come to where already people who have shares in the company are selling these shares, and definitely this comes at probably you put it at the hands of demand and supply of shares, based on how many people are willing to sell and how many people are willing to buy. And that's how these prices are, of course, orchestrated, because of demand and supply of a particular stock, the way you have demand and supply of other goods on the common market that we all know about. Still here, the forces of demand and supply work out very, very strongly, and we see people coming to buy stock, and the more buyers we have, the less sellers we have, and the more buyers we have, it means the prices, of course, will be driven up, because people then are willing to buy that particular stock, and therefore you will see people taking the stake higher, a little bit higher, and that moves the prices in that positive direction. This is how we come up with the top gainers for the day, as you can see on the screen here behind me. But definitely there are also sometimes when the prices move in the negatives, that is when the prices actually move down, and during this time we see that there are more sellers than buyers, meaning people are more willing to sell, and yet we don't have as many buyers as that are willing to actually buy. So the Uganda Security Exchange, after of course coming up with this particular opening price for this stock on the particular day of trading, of course it opens at exactly 9 a.m. and closes at 1 p.m. every single weekday from Monday to Friday. And every time we open this market, we see the opening price of this particular stock come to be listed on the Uganda Securities Exchange. Now, not everyone should buy or sell at this particular price, and this is something very important or critical for people to really understand how to trade on the stocks. We have a 15% window, either 15% above or 15% below. That particular price can be traded on within the law, within the regulations. It is acceptable. And what I mean here, for example, if MTN opened the stock market at 189.72 shillings, if you have 15%, if you have maybe 185, 187, and you would want to sell your stock at that price, it's acceptable provided it's within 15% of this particular pricing. And that's how we see prices move. So you realize that if there are more people selling at lower prices, and people of course are buying at those lower prices, you will see the stock price go down. If there are people that are willing to buy at a higher price, and of course there are people willing to sell at that particular price, let us say 190 for this particular stock trading at 189, you will see still the prices could move in that direction. And definitely this is how we come up at the top gain, come up with but of course all these cases where we have gainers and losers provide investment opportunities for shareholders, because look here, if you have a gainer here, meaning the people who are already holding stock have their value increased, and we see that they are able to sell at a capital gain, which is one way of gaining from the stock markets, buying at a lower price and then selling at a higher price. Now we can also say that these prices could move due to other factors, not just the forces of demand and supply. For example, these cross-listed entities like Nation Media Group, like East African Breweries Limited, something could happen in Kenya, and we see so many of these instances, especially right now in our current day and age. For example, in Kenya, where they're about to go into an election, where the Kenyan shilling has been weakening. You can see even against the Ugandan shilling, the Kenyan shilling has really, really weakened from averages of over 39 to right now we're talking about 32 Kenyan shillings per 32 Ugandan shillings per 1 Kenyan shilling. And we see that all those forces there can actually influence the stock prices, as we can read them out here. And you can tell that, for example, when Kenya is going into an election, you see stocks moving in a particular direction because of what's happening in the market, maybe because of the idea that the election might destabilize the country, and therefore foreign investors are selling a lot more, and of course the buying is not as much because we don't have many local investors. So you see either prices going down or going up accordingly, and that's exactly how the equity market works. Now, companies that are listed are, of course, under the Uganda Security Exchange Act, are mandated. They must issue financial results every single financial year, and these must be published in the media. They must be published in, for example, newspapers, and definitely for the public to view, because these are public entities and they must be held accountable in case of anything. And shareholders as well as the public must be in the know of how these particular companies are running their operations. Now, for example, CIPLA, which is listed on the Uganda Security Exchange since 2017, if I'm not mistaken. Yes, 2017. You can see that they have been issuing their financial results every single year since then, and they were not doing that before, but now they have to publish these results in papers and have the public look at them, because they're a public entity, and definitely they are supposed to be accountable to the public, because the public has a stake in this particular company. Now, one of the things that people look out for in the financial results of a particular company is, number one, the profitability of that company. Has the company made profit? Has the company made losses? Looking, for example, on one of the cross-listed companies here in Uganda, Kenya Airways. Kenya Airways has been, of course, making losses for quite several years right now, and just over last year we see losses of up to 134 million US dollars that have been made. These losses have to be registered and, of course, published in the company, in the media, for example, in the papers, and we can say that these help to inform the investors. They help to inform the public on how your stock is, your company is doing, and to see if people can still invest in your company and see growth of their stock. And this is exactly what we see here on the stock market. Every time a company publishes and maybe they have made a loss, definitely it means something for the shareholders. It means the shareholders may not be able to gain maybe their dividend at the end of the year. Maybe they won't get bonus shares. Maybe so many things could influence this, and this affects how the investors are investing in this particular company. Now, importantly also, these results, for example, if a company has made the profit, definitely the shareholders expect something back to them, and this is either through a dividend or through what we call the bonus issues or rights issues, and all these are avenues to help make the market attractive, to attract people to invest in the company, but also to give back to the people that have been able to invest in your company. And we see that this happens every time we are looking at the financial results. For example, Bank of Baroda recently issued their financial results, and last week they held their annual general meeting, which was entirely a virtual annual general meeting, and they declared a dividend of 10 shillings per share for every shareholder that is, of course, holding one share in the company. And so for every single share, you're going to get 10 extra, you're going to get 10 shillings for every share. So it's giving you back, depending on how much you've invested, depending on how much your value or is on the stock market on that particular company. These companies are mandated to give back to you as a shareholder in some way or some sort if they make profit. Of course, also this depends also on the regulatory space. Some companies, due to regulatory control and so on, they are unable to issue dividends. Yeah, and we saw that in the recent times of withholding banks dividends, like Stanbic Bank, Bank of Baroda, and so on, for over 2 years. And this was as a result of a suspension, of a ban on these companies issuing dividends for 2 years by Bank of Uganda due to several factors that include capital reservation and pandemic recoveries, and also having enough capital reserves for investing, for being able to liquidate, and also for making sure that the companies remain profitable, and also reinvesting some of this money. So all these factors beyond and above the demand and supply all influence the stock market pricings. We see this every single day on the markets. You will never see no movement in the market. Every single day we see movements in the market, and that's why if you're investing in some of these markets, you must be able to be equipped with information regarding the stocks and regarding whatever you're investing in, so that you are able to be informed and be able to make informed decisions. Now, that is one side of these financial markets, but we also have the side of the debt market, which we don't talk about here often, but actually exists and is one of the most lucrative financial markets, especially in our times right now, which we are living in. And these debt markets look into the borrowing and lending of governments, and we can see that also corporate bodies that have been licensed, that have been able to gain license from the exchanges, are able to obtain some of these debt markets. Now, we look at the debt instruments such as the treasury bond and the treasury bill. The treasury bond is simply a long-term loan that is given to government by the public, and this loan lasts for a specific period of time. In Uganda, for example, you can have a 3-year bond, a minimum, and then we have 10 years, we have 5 years, we have 20 years, and so on. In Kenya, they can even go as far as 30 years. And you can invest in all these debt instruments across East Africa right now. Wherever you are, you can invest. And these always work in a way that there is a coupon that is attached to them and return a coupon rate. At a certain rate, they return interest. And for example, here in Uganda, you have a coupon rate that maybe goes to 6 months. And you see that after giving this money, for example, you will lend government 1 million, you will expect a certain amount of money every after 6 months since you were able to purchase this instrument. These instruments can also be transferred to other individuals that were not able to buy them at the very first place, so long as the system is transacted. The system transacts that exactly in real time, and you see people moving away from right now the physical trading. You see people going online and buying all these instruments and securities and being able to transact them freely amongst themselves, because now the world is very flexible and we see a lot more flexibility in the market where you can access them on your phone, even with Altex right now, without need to access the internet. You can still access most of these instruments via your mobile phone, and these of course have been made convenient and accessible just for the fact that they are one of the performance indicators for a good economy. And definitely we see bigger economies, global economies like the United States, like London in England. We see them having very, very active markets, and these have led to quite a lot in terms of economic growth. And now that is also another part, the debt instruments. Besides the equity markets, we also have that market, the debt market, that definitely can be accessed still through the Uganda Securities Exchange, but also can be accessed through your commercial bank. If you would want to trade in a bill or a bond, you would also want to visit your commercial bank and being able to consult on how you can do that. Now, that also is another side of the coin. But then the other side is also the derivative products. These are specialized products that are currently not trading here in Uganda. We don't see them much here, but you can see in other economies, these are products derived from the other financial markets, like the debt instruments, like the capital markets, like the equities and so on. And they're specialized products and quite a little bit more complex, and they require a little bit of technical knowledge before you invest in them, because they're a little different from the other two. They're kind of a little bit different. Now, you can also have the fourth market, which is the commodities market, which we don't have yet here in Uganda as well, but we see it also in the pipeline, where you have commodities such as gold, oil, and precious metal, and so on. And all these commodities could also be listed on the exchange for trading in order to promote their trade within the country and across the world at given pricings. And all these are what we call the financial markets. And definitely on the show here, we will look into mainly the stock markets, seeing that these are immediately what affects our businesses here in Uganda, and some of the immediate investments you can make out of the little savings you have. Now, the whole point here is to run away from saving for food and just saving for survival to saving for investment. Saving for investment means you don't keep money aside just for the sake of buying food in the future, but you put money aside so you can put it in investments that can bring returns in the long run. And definitely that's what financial markets provide. And we can see that we're going to analyze the stock markets as per the close of the markets on Friday. The markets, remember, open on exactly Monday at 9 a.m. and close at 1 p.m. And we are analyzing data as per the closure of these markets on Friday the 15th of July. Friday the 22nd of July. And we are saying that we can see that these performances also indicate how these companies were able to end the day, whether with a loss or a gain in stock prices, what could have happened, and what do we expect. We're going to take a quick breather, and when we return, we will give you a little more of what happened on the stock market on Friday. Stay with us.